Hey, this is Sasha. Thanks for joining me in today's video. And what I want to share with you in this episode is really 4 different types of iron condors that you can trade. Now, a lot of the things that we'll be covering here is going to be from our upcoming latest course, which, by the way, if you get it before Valentine's Day, you will have $100 off to that course and material. Now, you can learn more about this if you visit our website. Just go to tradersfly.com. You can scroll down. There's going to be the Iron Condor course. This is version 2.0. So it's been reworked from the ground up from 4 or 5 years ago or so. If you're on the Traders Fly site, just scroll down. You can click it. There's a ton of material. It'll forward you to our purchasing website, which is Rise to Learn. Tradersfly.com is all free. And then over here, as you scroll down, you can see there's a ton of videos here, and we'll be adding some more as we go through. We've got a lot of earnings examples right now, which I did over the last 6 months or so from the previous earnings, a couple of earnings. And then I'm adding some more examples here for the trades right now as well. So anyway, I want to share with you kind of the 4 different types of iron condors you can trade. And you can trade quite a lot of different iron condors really when it comes down to it. And there's kind of 4 main types right here. So you've got kind of a high probability, a low probability, unbalanced, and a gamma or bi iron condor. Now, we will cover a handful of these in this options mastery course. So when you go through and you run through, you'll see that we've got balanced iron condors, high and low probability iron condors. There's unbalanced iron condors. There's legging in iron condors, directional iron condors, short duration iron condors with protection, gamma iron condors for earnings. So there's a ton of more iron condors really than what I've mentioned here. And there's even some others that you could do subsets of what we just talked about. But these are kind of the 4 basics, and this is what we'll cover here in this video. Now, if you want to get the course and discuss a little bit more about iron condors, just scroll down. You can click, there's a get started button right there, and you can go through the checkout process and you'll get access to the course and material. Right now it's about 21 hours long with many trade examples and more being added. Anyway, let's kick things off here with these iron condors and the 4 types here. And I'll give you some insight on these different types. So basically, when you look at doing iron condors, there's different ways to approach them. And when you go into the high probability iron condor, this is a very wide iron condor. So maybe like a delta of 5. If you don't know what delta is, it's just basically the span or range away from the current price that you're dealing with. So let's say a delta of 5 would mean you have like a 95% chance of probability of it expiring out of the money. Delta is also used for, rate of change as well for every dollar move, but there's a lot of different things. For us, for now, simplicity, we're just trying to keep things super simple. We'll just say, hey, 5 means way out, 50 would be kind of over here. So if we sell a 5 and sell a 5 on both ends, now we've got a pretty big range and a high probability with a high degree chance of winning. The downside with something like this is now this iron condor, you make very little. Okay, so you're making a little bit amount versus the risk is a lot. But those people that talk about and saying, hey, I win 98% of my trades, if you've seen those kinds of videos, well, yeah, you could do a very high probability trade. You just don't make as much. So this is something to kind of go through. It's just a, high degree of risk, low reward, but you're very consistent with it. The other one here that you've got is a low probability iron condor. This one's a little bit tighter on the deltas, and you can see you're making a little bit more money. So let's say here your delta might be 15 on both ends. Okay, so you might have a 15 delta. So your percentage or chance of winning are actually smaller, but the amount you win is a bit more. So let's say over here you're trying to win about $100 on the high probability. The low probability, you might actually aim to win $300 or $500. So your chance of the amount you'll win could be higher. However, the chance of winning that is a bit smaller simply because you got to keep that ball in range, and the range now is smaller. The goalpost is now smaller. So that's kind of a low probability iron condor. Then we have an unbalanced iron condor. An unbalanced one is maybe I have 10 contracts on one side and maybe 6 on the other. This allows me to be a little more skewed. Now, you could have unbalanced for bullish. You could have unbalanced for bearish. So that's kind of a one that's a little more directional. So if you see the market kind of grinding a little more to the upside, then this is kind of one to keep an eye on. And then we have a gamma or buying an iron condor. So this one is more of, hey, you lose theta. So this is a little bit backwards. You lose theta, but you're just looking for a big move, either up or down, and they behave a bit different. These are more advanced and complicated. And again, there's many more iron condors beyond that. I would highly encourage you to check out the course for these kinds of things, and there's more to discuss. The link is going to be in the description below, so definitely just take a look, scroll down, and you'll see the link to the course. Now, I want to show you a couple of these iron condors here as we go in. Just show you one that I've got here with Adobe. Here's one with Adobe I just put on today. This is a bit of an unbalanced iron condor. So you can see I have 10 contracts on the put side, 8 on the call side. So it's a little bullish. You know, it's looking to be a little bit bullish. This is going to probably go in the trade examples. Then I have another one that's on Home Depot. This one's a little bit flip-flopped, a little unbalanced the other way. And we took a little bit of profits there. Here's one on Goldman Sachs. This is a gamma iron condor, or buying an iron condor. But you can see the problem here is I got a negative theta. So it functions and behaves a bit differently. If I was to do, you know, I don't have other iron condors here right now. I'm just doing some trade examples. If I was to do kind of a different iron condor on here, here is maybe I'll show you a higher probability iron condor on this one on Goldman Sachs. Just kind of show you another variation, hide positions. So if we go in, here is kind of a higher probability iron condor. We'll do 10 contracts there. You can see what I'm doing here is aiming to make 800, trying to make 800 with a risk of 4,200. And I get a theta of about 23, 24 on that. Now, if I was to tweak this one a little bit, and let's say I brought it in 10 points or so, 875, this one's 320 and 315. Okay, so now I've got one that's a little tighter. So what you can see, the difference between this one here is the amount here versus at risk, okay, comparing it to the other one that we've got. Okay, you can see this one's a little bit wider. And if I just set up two break-even points, okay, what you'll see is now I've got a width or range of about this much, and then the other one that I've got is much tighter. So you can see the difference here is, you know, bringing it in tighter, I can make more money, but the problem is I don't have as much range. So which one do you want? Well, again, it's a matter of personal preference here to some degree. So anyway, I just wanted to share that with you, that there's different types of iron condors depending on market conditions, depending on what you want to do, depending on the setup. And there's so many things and ways to go about it. And I highly encourage you to check out the options course right here, Learn to Trade. It's the Iron Condors course. Just visit our website. It's at tradersfly.com. You'll be able to get a break discount and promotion here on it if you're serious and interested and you kind of are a DIY learner or DIY person, because if you're DIY, you could go ahead, use this as supplement material, kind of learn it on your own through just getting some good baseline and foundational concepts. Now, if you like to work more in depth and do some things one-on-one together, usually what I do, the majority of the things that I do is work with people on a 2, 3, 6, 8, 10 months basis. And if you want to do something like that where we meet up weekly, check out the coaching section here, and you can just book a 20-minute session, absolutely free. And we can chat a little bit more about that if you're serious about learning to trade at a higher level and deeper understanding. So anyway, I hope that helps. Truly appreciate you joining me, checking this course out. Hope you grab it and start working yourself through some more iron condors. If you've only been doing iron condors one way, just understand there's many more ways to do it, and hence why I wanted to share this in this video for you. There's at least 4 different types there at a basic level. There's many more other ones and versions and variations, and you know, even subsets of that as well that I cover more in the coaching and one-on-one section rather than just the course, because there's just so much information and material in this subject, and it's a complicated subject, and I definitely encourage you to check it out. So anyway, thanks for joining me. Hit the link in the description below. Truly appreciate it, and I hope to see you there on the course, or maybe we'll be able to chat there on a 20-minute session if you decide to take that route. So I'll see you next time.